This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Hello again from TF Metals Report, and welcome back to your podcast highlights for the week of May 13th through 17th, 2024. A very busy week of economic data. Producer inflation, consumer inflation led to big moves in the bond market, big moves in the dollar index, and big moves in the metals as well. As the week began back on Monday the 13th, we got another big red candle in COMEX gold. That's the third one in 3 weeks. Now, on the bright side this time, the damage was about half as much as we saw back twice in late April, but still over $30 down in COMEX gold. Notably, though, COMEX silver hung in there all day. Would that foreshadow some fireworks in silver to come the rest of the week? Well, you're going to have to wait to find out. But that sure caught our eye back on Monday. And that was all part of what we discussed in our podcast. Again, Monday, May the 13th. But look at silver. Silver's already completed a little reverse head and shoulder, hasn't it? As it came down, that massive puke that really broke it. The day gold was down on April the 22nd. $65 and silver was down $1.60. Bottomed out at $27.50, dropped to $26.50, rallied back up to $27.50, and now here we're up here at $28.50. There's even a really clear trend line off the lows, isn't there? Look at that little skinny blue arrow I put on there. So now, again, dollar might rally tomorrow on hot inflation, and silver might puke, and copper might go down, and we could be back to $27.50 and just trading sideways. But this chart, at this instant, on Monday afternoon, sure looks like it wants to go to 29. If not 29, even above 29 intraday, and try to make a close above 29. Tomorrow, Wednesday, big days, and that with that inflation data driving it. Tuesday, the price index here in the U.S. Now, though the month-over-month data was above expectations and caught a lot of attention, as people digested the report, they noticed that the previous month of March had been revised dramatically lower. Maybe that would happen to the April number when we get around to next month. We'll see. But that was enough to turn everything around. The bond market began to rally, and the dollar index began to fall. The dollar index now perched precariously on what seems to be pretty important support at 105. A dollar index falling further would add some fuel to the fire for the metals. And so we had to watch it really closely, and that's all part of what we discussed on Tuesday. All right, here's the dollar index chart I was telling you about. Again, maybe it'll soar tomorrow. Maybe inflation will come in hot. We'll blast through here, blast through 105, get back above the 20-day moving average and all that kind of stuff. But let's start with the lines I've drawn. Again, 105 resistance, February into early April, 105 support now so far in May. But after a double top at 106.5, there's clearly a trend line down that is forcing us against that 105 support. All right? Now, look at the red and the green lines. The red line is the 20-day moving average. We're talking about those a lot lately. But notice it's an uptrend, right, from really the beginning of the year. So when we broke down through the 20-day, the end of February, look, we even fell through the 50-day, but then got back above, and now we've been bouncing off the 20-day and the 50-day support until a few earlier this month, I guess, when we fell below the 20-day and bounced from the 50-day, but then failed to get back above the 20-day last week. So that's what I mean. You put all this together, this looks like it wants to go lower. Break the 50-day like it did back in early March and head down to this trend line, which again, we've noted as a target of 104. So, if the dollar index is going to fall a point, if I'm right, and I'd say I'm 70-30, probably going to be right on this, what would a point in the dollar index do for us? Wednesday the 15th brought the consumer price index, and guess what? It was tame as well. Market's quite volatile to begin with, rallying on the news, then falling back sharply, bottoming out, as they often do, right at the London PM fix, 10 o'clock Eastern. And then they took off. Gold rallied higher, silver rallied sharply higher, getting within sniffing distance of $30 an ounce. What does that chart have to say? Well, we discussed that Wednesday, May the 15th. Here is silver futures, front month July. Blowout today, $29.94 when I printed this. COMEX close was closer, I think, to $25.80 or something. Whatever. Still the highest close of the year, highest close in a long time. And again, look at the technical positioning. Well above the 50-day moving average, got above the 20. The 20 is moving higher again. This looks like it's going even higher. That does not mean the banks won't try to rip it back lower tomorrow to create the illusion of a double top. Okay? So just keep that in mind. But that's a beautiful chart. But prices did not rip back lower on Thursday the 16th. Oh, they went a little bit lower. Gold was down $10 or $12. Silver was actually up, held in there all day. How about that? So we don't know how things are going to go on Friday, but as of Thursday, there's reason for optimism. One of the charts we looked at would get caught up on COMEX gold, and that was part of the discussion on Thursday, May the 16th. Gold on the daily chart, okay? This is more clear on the silver chart, and I'll show you that in a second. But look at this little reverse head and shoulder bottom we got going here. Breaking down, holding 2340, then 2300, then back up through 2340, and now here we go back up. That old level there, that all-time closing high from back there on April the 19th, right? April the 18th, April the 19th. That all-time closing high is 2413 or 2414. I don't think we can get there tomorrow, but anything's possible, I guess. And on Friday, May the 17th, we'll wrap up the week. Got to battle a lot of stuff on Friday. We got New York Stock Exchange option expiration. We got a clear desire for the banks to try to get silver price back down to avoid a breakout. As you can see on this chart, any close up north of 29 on spot silver or silver futures for that matter would constitute a breakout. But boy, if you get into the high 29s and above 30, you really have something. Now, Friday's podcast was actually recorded on Thursday, and I'm out of the office on Friday. So as I speak right now, late Thursday, I don't know what happened. I don't know if we broke out and closed in the 30s on Friday or not. So you, as you listen to this, you know. But we don't know. And so here's your chart as it looked late Thursday. For your podcast on Friday at TF Metals Report, we had a discussion with our old friend Dave Kranzler. Dave runs great newsletter called the Mining Stock Journal. You can find it at his site, Investment Research Dynamics. Dave's an old friend. We love getting together to talk about the markets. And we spent some time Thursday talking about the importance of a breakout should it happen. Again, as we record this, we didn't know if it would happen or not, but that was all part of our discussion that day. You can find that podcast right at the TF Metals Report homepage. It is a free link. You don't have to be a member of TFMR to listen. So just go to tfmetalsreport.com, click the link, and give it a listen. You'll want to listen. It's a great podcast full of very insightful information. Again, here's just a snippet of what we discussed on Thursday the 16th, posted Friday the 17th. All right, so Dave, again, just remind everybody, we're recording this on Thursday in the middle of the day. We can't know where prices are going to close, 4 o'clock tomorrow afternoon. That's still over a day away. However, we do know what happened to gold when it broke out. The range has been going on for 3.5 years, breaks out, closes at 2090 on Friday, March the 1st, and a week later it was 2200 because everybody saw the breakout. For silver, that level is somewhere north of 29 on the COMEX contract. It's right now, the COMEX contract is recorded as 29.93. Anything that begins with a 3, I would think would be a recognizable breakout. So as if people are listening to us, let's just say that has happened, okay? That somehow, because they've been unable to break it down, COMEX silver finishes the week with a handle that begins with a 3, as does spot. What will that mean to price in the short term?
So you had mentioned you're going to put some charts into the podcast, and I have a chart that I'm putting in my newsletter that actually comes out this afternoon, and I'll send it to you, and you can use it, and I won't be offended if you don't. But what's interesting is so that 3 year kind of handle on that longer term cup and handle that on gold that broke out. You remember that, right?
Yeah.
Yeah.
That's what I'm talking about.
So I show that, and then right below it, you look at silver, and it's almost an identical formation. It's not a clean. It's kind of like a lopsided cup, right? Because we're obviously still well below the all-time high. But in 30 on the front month contract, 30 is kind of the demilitarized zone, or the line in the sand. The formation that we have right now with silver is almost identical to the 3 year formation that broke out with gold. It just hasn't broken out yet. And if it breaks above that, I think we shoot into the mid 30s pretty damn quickly.
And that's it for this week. Thanks again for listening to the TF Metals Report podcast highlights. Again, a daily podcast, just part of what you receive by being a subscriber at TF Metals Report. It's only $15 a month, and it's money well spent. Not just for the podcast and the analysis I do every day, but just to be able to interact with the community. Best, hands down, not even close, precious metals community on the internet. You want to be a part of it. Again, check us out, tfmetalsreport.com. Have a great weekend.